From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli on another day where we tested records but didn't quite get there, Nadine.
Which I find a little surprising considering we're only hours away from one of the most hotly anticipated central bank decisions that I can remember. So I thought people might be a little bit more reticent to take on risk.
Yeah, well, I am blaming those iron ore players because China had been on holiday for the Lunar New Year, and then you saw the iron ore contract come back and take a little bit of a dip, so that hit BHP, Rio, and we're only down a couple of points, I think. But let's see where the market is tracking if we can. No, we can't. So I will tell you by looking at the ASX 200, we're only down 3 points, 8,137, and should point out, I should say, that we did hit 8150 earlier in the day,
which was a record.
That good bull run was happening during your hour. Maybe I broke the market as soon as I started talking. No, I'm not that important. Yeah, okay.
Right. You know what's just a note is because, of course, we're on the cusp of the European session. We did have that UK inflation data come in, rising 2.2% annually in August, as expected. So just putting that out there to show you that, past 4 o'clock here in Sydney, we are still keeping our eye on those headlines coming through markets.
Yeah, but it is all about the waiting game. We have been talking about this for such a long time, the expectation of a rate cut from the world's biggest central bank. So many of our guests, I can think of Carl Rodder today, Deanna Messina earlier as well. It matters not whether it's 25 or 50 basis points. It matters, is this an emergency cut? Are they front loading? The validation, I guess, from JPAL as to what they do.
If you just want to get a shorthand for what we can expect in the different scenarios and what JPAL may or could say to earn his big bucks, there's an interview up online with David Scott. You might remember him, Scotty. And he lays it all out for you if you just want to get ahead of the game when it comes to this Fed decision. But look, there's not a whole lot more we can say about it. You and I will talk to our special guest about that one, but it's just been such a long time in coming.
It has indeed. All right, iron ouch. We mentioned China coming back online, some weakness in iron ore futures in Singapore after the lunar long weekend. So that has weighed on BHP and Rio, and as I mentioned, weighing just generally on the overall market whenever you do see a downward blip in some of those big stocks. BHP's off 1.2%, Rio is down by almost 2%. Then, of course, that's going to weigh on the overall index. And then I guess it's about, now what do we talk about?
Well, we're going to be talking about jobs at 11:30 tomorrow here locally. There's always something else.
RBA
we'll get past the FOMC, although that will give us plenty of fodder. Here's a picture, some snapshots of the different sectors. We already talked about BHP and Rio Tinto, Fortescue down as well. Watching the gold miners, Northern Star, Newmont, Evolution, all pushing higher. And listen to that interview with Scotty if you'd like to know what his view on gold is and what could happen in the case of a 50 basis point versus 25 basis point cut.
A quick look at the energy sector as well. Some good gains there. Woodside, of course, has that Japan LNG deal. And the banks, if we have a quick look at those, I think Macquarie at one point eased from records, but then it looks like it's higher again, up 0.4%.
Bit of a mixed picture here, though, as you can see clearly with CBA down by 0.2%. I had a chat with James Garish from Shawn Partners earlier today. Just reminded me he touched upon the energy stories as well as banks. And it was interesting to hear how, Market Matters has been allocating when it comes to some of those big U.S. tech names, of course. Google, for one.
All right, let's have a really quick look at the top corporate stories before we get to our guest. Rio, we mentioned the iron ore factor, but also this bio crop fuel farming trial for renewable diesel production.
Yeah, Macquarie reportedly is considering selling a stake in WaveNet, which is a UK IT services provider, valued at about $2.4 billion. Woodside has signed that sale agreement for the long-term supply of LNG to Japan as well.
And BlueScope signing an MOU to trial Helios, which is of course based in Israel, the green iron in its steelmaking operations. Harvey Norman doing okay despite, of course, that lawsuit coming through from Echo Law, the class action about what they say was hundreds of millions of dollars of unnecessary and worthless extended warranties.
Yeah, Imugene has hit a 2-week high on an FDA orphan status for one of its cancer treatments being granted. And I just mentioned that because I was reading a note from Macquarie a little bit earlier today talking about the sectors that are likely to outperform once the RBA starts cutting, and that included biotech, pharma, gold, and financial services. I'm really trying to get some Macquarie analysts on. We just may have to wait a little longer though.
Just write them a really nice handwritten note. But somebody who always joins us, we're very grateful, Mark Gardner from MPC Markets.
No sloppy seconds here, Mark.
Pay the courtesy, of course.
Now, Mark, the Fed finally happening. Your thoughts?
Oh, I'd just be glad it's over. We've been talking about it for so long now. I think it's sort of been wavering between 25 and 50. I don't think 50 realistically should be on the cards because I think that probably sets off a little bit of panic. The Fed's only ever really gone 50 first move when there's been like a black swan or event or a very, a large looming sort of event with the stock market at record highs and then the economic numbers coming through, not they're softer, but they're not terrible. 50 would be pretty irresponsible, I would have thought, but I think 25 is reasonable to kick the ball going. I think markets have been this whole week really. It's with China on holidays and we're all waiting for this decision. It's been pretty boring. So I'm looking forward to being able to just sort of get back into things and make some more definitive decisions as of tomorrow, realistically.
Yeah, well, that is right. I know David Sokolsky from Carragh Capital was saying that a 50 basis point cut would spook the market rather than.
I think so as well. Yeah, because it does infer emergency, like they're genuinely concerned about something. So. I think 25 is the best result for the equity market overall, and then possibly just a wait and see attitude. We've kicked off the cycle, and essentially just saying we'll wait and see on figures, but it's going in that direction. I think that's probably the best result overall. One thing that is of concern for the tech sector separately, though, is we noticed it was something that went through Newswise. It's been largely ignored. Is China's finally got the semiconductor patent through. So that has a pretty big monopoly disruption potential as well. So I think there was a lack of reaction last night around that, but ASML is the only people in the world that can do that at the moment. And if that's
game on, if China's there too.
It is very much game on. So yeah, I think that was largely ignored, but I think that may filter through once we get through this Fed decision because everyone's on hold at the moment in terms of portfolios. When we're sitting on cash and been essentially waiting to see what the next direction is.
I'm not sure it's been completely ignored. I would say Chinese stocks, they've hit the daily 10% limit today on that news. So there has been some big moves there,
more so the US.
The US, so maybe that'll flow through tonight. Let's talk about some of the other big moves, and particularly what we're seeing in iron ore. Particularly, was it Vivek from CBA saying?
Yeah, iron ore in the near term falling below that 80 US wet metric ton level.
Yeah. Everyone, almost the massive cheerleader is the Financial Review. If iron ore, even intraday, goes negative, they write about 5 stories on it at the moment, so it's really hard to hide from it if you're reading any sort of financial press. I still think these iron ore stocks at the moment have already been really heavily hit. Fortescue produces at $18, so there's still massive margins there, and I think BHP realistically in the long term is probably more of a copper story.
BHP to get something like 50% of its EBITDA, I think, from
iron ore. With the potash and the copper operations in the next couple of years, they're actively reducing that percentage down to, it'll be anywhere down to, well, depending on what prices are in potash and copper, of course. But BHP did actually come out publicly and say that copper shortage was definitely coming, and so I think that's probably what's held BHP up there a little bit. But Fortescue at these levels, I think you play the range, and it's trading its mid-single digit PEs. One thing I think people have dismissed as well, they use something like they spend something like $600 million on diesel a year. Diesel prices have fallen 42% in the last 12 months. So there's cost savings coming through there with the weakness in the energy price as well, which will help their margins. So I'm not particularly worried about it. We're happily long around these levels. Would be very concerned if I'd been buying at $50 in BHP and $29 in Fortescue. But at these levels, I think if you're just thinking about it on a 2 to 3 year basis, you're not going to get much better in fully franked dividends because this cycle will eventually play out. So
yeah, that's I've sort of been wondering if 2025. Of course, we have to wait to see what stimulus will come or may come from China come October. But will 2025 be the year of the commodities turnaround? I
think so. I think there's potentially, I mean, commodities versus equities. Commodities are at even below 1970s record lows in terms of how cheap they are, and I think as well we've seen quite a few. We've seen nickel and obviously lithium and things like where it's almost been like supply gap whack-a-mole for about the last 3 or 4 years. I think so. Copper or uranium is likely to be the two that most likely candidates next, but these supply chains being shored up, like people just to make the assumption they can always get it, and that's turned out to not be the case sometimes. So look, I think there is definitely short-term noise in these commodities, and it's not going to be for the faint-hearted. So you can probably miss the first 5 or 10%. But I think once we're through this period, we're not expecting. We're expecting a slowdown, and we're expecting rates to come back. But I'm not expecting anything to decimate the market in particular. So you'll probably just have to wait out a period. But every time you've been able to get Fortescue around 5 and that dividend yield and that franking credits and BHP the same, you've done very, very well in the long term. So, there's a couple of trades that play out quite well. You've just got to put your fingers in your ears and cover your eyes sometimes when, when the likes of the financial press are absolutely raining down this month.
Journalists, they're terrible.
Not you guys.
Not us.
No, but it's been
not all journalists. Hashtag.
Yeah, but obviously, you sell panic, you get the clicks. So it gets played on repeat sometimes. So we're not overly concerned on a 2-year basis. That's for sure.
All right, Mark, we might have to leave it there. Well, we thank you as always,
Cheers.
Mark Gardner from MPC Markets, joining us there. Our stock of the day today was Woodside.
Yeah, based on that LNG export deal with Japan, I think lots to talk about in terms of broader market dynamics. And we had Henry Jennings from Markets Today in studio, along with his friend, Andrew Whiteland from DP Wealth Advisory. Take a listen.
If you charted Woodside against the oil price, I mean, that kind of tells the story, really. And this deal doesn't really change it. JERA is already part of the Scarborough. They put money in, as you say, earlier this year. So it's really kind of formalising that in terms of that offtake agreement or that sales contract agreement. The thing, I guess, that keeps Woodside in investors' minds is the dividend. They've got an 80% payout ratio, and that is first and foremost what keeps people interested.
And certainly a lot of my retail clients that are looking for income, that's certainly up until, because they've just gone ex-dividend, that was one of their favourite ones. But the chart looks ordinary, there's lots of pressure relating to Scarborough, so it's a hold.
Okay.
Nice to have Andrew in studio for a change.
It's lovely to see him. Said hello, been to the Lego store, lots of excitement.
I forgot I've got some photos to post online if anyone's interested. Let's get across some of the market leaders and laggards. It was quite quiet on the corporate front, and most of these leaders, not associated with news, although New Hope Corporation did report yesterday. I had a great chat with Lucas Good from IML Investors about 3 small caps that they think the market has really missed the story on. They're pretty positive on these stocks. And that included New Hope. So you can go find that on the website under 3 stocks for.
Interesting. Okay, to the downside, I wondered why New Hope was rising so much today as well, but it did fall yesterday. HMC Capital, Telix Pharmaceuticals, so a bit of weakness in the healthcare sector there. ResMed also under pressure, down by about 3%.
Yeah, and don't forget we've got AGM season coming up, so we might get some more to hang our hats on in the coming weeks. Here's a look at the small end of the market. Look, I won't go too far into these, but I had another great, I love small caps, another great small cap conversation today with Matt Griffin from Maple Brown Abbott. So he gave me one of his really great small cap picks. Again, I'm not going to give it away. You can easily find that information on the website, ausbiz.com.au, under small caps.
I would note that ECS Botanics had a good day, and we spoke to the CEO today in the 3 o'clock show. So when the person that edits the videos gets to that will be up on website. That is either you or me. Yeah. When we get off air, we'll do that and we'll put it up. All right, tonight, of course, the Fed interest rate decision is the key one, and of course the outlook and guidance from Jerome Powell.
Yeah, we will also be keeping our eye on, sadly, rising tensions in the Middle East. Pretty incredible images, of course, coming out of Lebanon, and you're really sort of concerning what's going on there. We've got news that Lebanon's Hezbollah chief will give a speech on Thursday after the detonation of those pagers. We did already have that UK inflation coming in at 2.2% annually in August, as expected, and we're working our way towards other central bank decisions as well, including the BOE.
Exactly, and RBA next week. Tomorrow, the labour force data, which of course the RBA will be watching very closely. I think Paul Bloxham from HSBC is going to be joining us on the back of that. New Zealand economic growth and a couple of stocks ex-div as well. Just another interesting point I've just seen coming through on Reuters: India topping China for the first time ever in a key MSCI equities index. So this is really just showing the outperformance of that Indian market too, as we start to see weakness in China. All right.
So the US dollar is dropping against the yen ahead of this FOMC meeting. I'm going to get a good night's sleep tonight, Jules, because I'm in early to help get us across that.
You are on Fed Watch indeed, and we are on Market Watch. We didn't quite make a record. The ASX down 6 points, 81.35. We'll be back tomorrow with the Fed wrap up and to do it all again.
We'll see you then.